The Make General Journal Entries function can be found under the Company drop-down menu. The top portion of the body of the Make General Journal Entries window prompts you to put in a date and then an entry number if you want. If your accounting preference is set to automatically assign a general journal entry number, then the previous entry number will be incremented by 1, just like it does for other numbering sequences for other forms. This field can also be alphanumeric and can be changed at will during or after its creation. In the body of the entry, you can put in an account of your choosing from the drop-down list of the chart of accounts. Once an account is chosen, then the amount must be designated as a debit or a credit, and then a memo can be entered, and if the line item activity relates to a customer, job, vendor, or other name, then this can be selected from the drop-down menu of available lists to choose from. Lastly, if the transaction relates to a revenue or expenditure, you can prompt QuickBooks to make it billable to the selected entity, and then the transaction can be assigned to a given class if desired. Of all the fields to populate, the most potentially troubling to a user is the notion of whether to debit or credit the amount in the first part of the entry. To help you in this process, we would like to offer you a tool to help you determine whether you should debit or credit something. We are going to put on your screen an accounting debit credit matrix and provide you with the ability to print this out for future reference, which you can access through the printable handouts section at the end of the table of contents. The matrix has 4 columns of information. Let's start with the second column that indicates the 5 basic types of accounts that exist in accounting. That's right, any and every single account ever created or that ever will be created will fall under one of these types of accounts. Next, let's look at the first column. This column represents the basic financial statements that each account relates to. So assets, liabilities, and equity relate to the balance sheet, or the statement of financial position as it is sometimes referred to, and income or revenues and expenses include cost of goods sold type of expenses relate to the profit and loss, or what is sometimes referred to as the income statement. Although there are other types of financial statements these account types can relate to, the balance sheet and profit and loss are by far the most popular and familiar financial statements used by all businesses, both large and small. Now, the last 2 columns are the key to the matrix in terms of informing you of whether a debit or credit represents increasing or decreasing a given account type. So, for example, if you bought a piece of machinery for $60,000, that is an increase in an asset, which is a debit, and if you paid cash, which is an asset, then the other side of the entry would be a credit to cash since you gave up or decreased your cash position to secure the asset. If you assumed a liability to purchase the asset, then it would be a credit to a liability type of account since you increased your liability to secure the asset. Notice that there is always at least 2 sides to every transaction, and debits must equal credits. This is an absolute rule in accounting that cannot be violated in order to have your books be in balance. Now, let's walk through a transaction from start to finish using what we covered in lessons 8 and 9 and what we just learned above regarding journal entries and the debit credit matrix.